Hello and welcome. I'm Ann Taylor, Director Content Strategy with CIO Marketing Services, and I'll be your host and the moderator for today's discussion, which is titled Mitigate Business Risks with a Reliable Tax Calculation Approach. It's brought to you by Vertex. Our discussion today will look at some of the nuances of tax calculations that can quickly become pain points for the organization. And because every company is now a data company, these differences, such as naming conventions for tax rates, can create data management issues for finance teams that can then escalate and become costly problems. To provide insights and guidance around this topic, I'm joined by Gunjan Tripathi, who is the EMEA Director of Solutions Marketing with Vertex. She's an experienced chartered tax advisor and has held consulting and leadership roles at large enterprises. Gunjan, thanks for joining me.
Hello, Anne. Thanks for having me today. Um, I guess extending a little bit of an intro further would be that I live and breathe VAT, so value added tax, and its counterparts are better known as GST, so goods and services tax, and of course the sales and use tax that possibly most of my American colleagues are more used to. And it's very interesting how these overlap and also still have very distinct identities. And dare I say, over a well over a decade of career has spanned just making sure we are walking through these minefields carefully for the businesses that we help out.
It's true, these little nuances can make a difference. Well, let's start with a bit of an overview and set the stage for why IT decision makers need to hear this conversation. At a very high level, organizations are still undergoing digital transformation. They're digitizing data, automating processes, and moving to the cloud. But when it comes to tax calculation, these processes are still fairly manual in nature. Finance teams might be pulling together data from different sources and even performing calculations and reporting out of spreadsheets. Perhaps an analogy to this, and that's pretty basic, is about mixing paints. You might use several different cans or pots of color to get a specific hue, but it takes a great deal of effort to get consistency, to mix that same mix of colors each time for that same hue. And if you don't get it right, the results are going to show. Similar, but much more complex, are the risks of not having consistency and accuracy in tax calculations. So, Gunjan, bringing it to you, could you talk about some of the business risks of using manual calculations and processes and maybe give us an example?
I'm going to extend an analogy there, and that if this was a game of having masterpieces created every time that were distinct from each other, manual processes are the way to go. And each tax official or tax and finance specialist would be an artist. But it's actually the complete opposite, where consistency is key and the ability to always trace back one's steps in case of an audit, routine inquiries, or for things such as your risk profiles, and to be in line with publicly available tax strategies as businesses have to maintain in certain countries. Um, Clearly, winging it is never the solution, and having a process that is extremely well defined, um, and such where human intervention also follows processes as and is in line with guidance that the authorities provide is very key. And this is why more and more authorities are now nudging, encouraging, decreasing their tolerance towards manual calculation and processes. They might have different flavors across the world, but ultimately, everybody wants to consume this data faster. And as you rightly were saying earlier, not just every company is a data company, every tax authority is now data driven as well. So even they are consuming at the same speed that the commerce is.
That's a great point. You're dealing with not just different sources of data and different types of data, but different regulatory authorities. It's a lot to keep track of manually. But coming back to that paint analogy for a second, if you're using different colors or different paints from different stores, you risk consistency and accuracy problems. And when you're talking about tax calculations, these issues are again much more complex. So if a company is doing business in different US states or different global regions, the finance team has to consider different tax rates and methods for calculating tax. So again, Gunjan, even some of this terminology can be different. That old cliche, you say tomato, I say tomato. Can you expand on these differences?
Absolutely. Let's pick up a very geeky tax example. So, the concept of exemption. Um, Exemption certificates, a well known way of processing, invoicing, and the reasoning behind not charging tax in a certain scenario in North America actually does not equate to exemption as used by the European language, where exemption with credit or exemption without credit, aka zero rated versus completely out of scope of tax process, is where the term exemption goes down into separate rabbit holes and they're not comparable. Um, and actually, something which comes very close to an exemption certificate in practice, i.e., one party authorizes and gives documentation to other so as not to be charged this transaction tax, happens in a cross border scenario in Europe and in the EU in particular between two countries called the reverse charge mechanism. So either the terms don't match or the language doesn't. So, unless the nuances are well known and the logics behind them have been mapped to their extent of application and then equated for, only then could we get some consistency. Um, so, while we all might be trying to make the same shade of red and bringing out to life that tomato, but I think we'll still keep having differences of size, opinions, taste.
I like it. We're really rolling with these analogies. I like it. Um, you know, we alluded you alluded earlier to the regulatory landscape. Different countries or different regulatory bodies are becoming data authorities as well. And I'm guessing this is another significant challenge within the tax calculation process. What are you seeing as some of the issues here?
So let's start with the most primary concern, which is the time that was available to the tax and finance teams, even until 5 and 10 years ago, has shrunk massively. What could have been 3 months, a month, 2 weeks to prepare and analyze your data for a summary VAT return has been brought down, in some cases, down to 48 hours, less than 4 working days. Um, and the amount of information that is being requested has grown so much that expecting humans to keep up with it in a consistent way and to never not be manning their desks is quite impossible. And I really am of the opinion, which is it's being done on purpose, i.e., we do want less human intervention on the day-to-day steps, and we instead want a system whereby humans and tax experts are overseeing the processes and helping audit the process for its ability to check each and every transaction thoroughly rather than only checking a few transactions with the sample system methodology.
That's interesting. Yeah, I like that theory, that perspective. Um, I'm gonna lean into that paint analogy again. The ideal scenario would be a dependable way to mix paints so you get the same hue each time. It's why we go to a big paint store. They'll mix the colors with the exact specifications and they will take into account other factors such as whether it's an exterior wall, an interior wall, um, and other factors like square footage. So, what I'm trying to get across is that IT leaders and managers are on the hook to provide the data strategy that supports their finance and operations teams. And these teams want consistency and accuracy to mitigate any risks to the business. So, with that in mind, what data management recommendations would you make, Gunjan, to give our audience some idea of what it takes to properly handle tax calculation to ensure compliance?
This analogy is beautiful, and let me continue with it, which is again, if you are looking for what suits you best, while you can go and buy something which is off the shelf, yet you should have a very good grasp of the strengths and weaknesses of your own business and the data processes that you have today. Knowing the points of failure from where the data is originating and coming into your reporting process is as important as picking the right calculation software and the compliance partner. And when you know exactly what is that you're exposed to, i.e., which regions, which sort of supply chains, which sort of vendors, and possibly even where their warehouses are located, to the nature or the seasonality of the customer base, being consumer versus business, what impacts they have from socioeconomic global changes. All of these have a ripple effect on what you're about to report to your tax authorities in different countries. Now, knowing where the sensitivity is higher or will have a more significant impact versus the others can, for example, let you know which countries are you going to roll out first with tax calculation versus which ones are still more focused on compliance. So, again, each one of you is helping develop that perfect shade of that color that you want to paint your walls, but then based on the fact that whether your walls are in a humid environment versus a dry, arid environment, or being brick walls versus stone walls versus whatever else you might have made your house a home with. So, data management recommendations have to be tailored. And this is why gone are the days of buying products. Today, we live in the world of buying solutions that really work for us as a business when we are purchasing. And this is why deep conversations need to be had. The more complex your business and supply chain is, the more you need your IT teams, your data teams, your finance teams to be in the conversation with the procurement teams and really lay down the requirements of the business, and possibly be working with a third party advisor, both from an ERP or IT framework implementation, as well as possibly tax and audit purposes, to find you the best fit. Um, and that's only the selection process. The next will always be the implementation, i.e., you've got the paint home, but the painting, whether are you going to do it yourself, are you going to get someone else to do it, etc., can also impact what you buy and how much you buy of.
This analogy has worked so perfectly throughout our discussion. Thank you for rolling with it. um, Before we wrap up, Gunjan, do you have any other advice to help ease IT complexity or data complexity around tax calculation?
I think the ease element has to be understood again from a perspective of appetite of a business. What does ease mean to different business leaders? For some, it would be the ease of having greater control and visibility. And for others, it would be the ease of having to do less of the research work or the intense manual hours of so called administrative processes, which are tinkered for each and every jurisdiction. Um, so again, with in line with our previous discussion here, it would be about what sort of teams do you have today in place, and what are the visions for those teams in future, whether they would like a complete control of their data in-house versus really wanting to lean on a partner, whether it be an outsourced provider, whether it be a technology partner, whether it be a research partner, to give them the information. That could vary. But if we were to say and talk about the trends, typically most businesses are in the business to stay profitable, to do commerce well, not really to run very heavy tax expertise teams. They are ultimately to enable businesses stay compliant. They are ultimately costs of doing business, and to help enable that they are doing all their groundwork in line with the authorities, um, which ultimately does often beg the question about the division of labor, or do you just leave things to be best dealt with experts? And this is where the appeal of being able to lean on an organization, a business partner, a technology that is able to connect with your current technology landscape, but is actually also pre configured with the content, such as the tax rates, the jurisdictions, the interpretation of the differences between these laws in different countries, or the difference between the same good or service but having completely different rates and regulations across different borders, to already be a part of your technology consumption and be a part of your technology stack. Um, so, therefore, t- I think I'll circle back to our opening comment of this conversation, and that this is exactly why the IT teams need to be talking and thinking about tax, so that they don't have to become tax experts, but so that they can be a good enabler and team player with their tax and finance team in keeping the business solid and foundationally strong in the matters of compliance.
Right. I mean, IT leaders and managers can't be expected to be tax experts, and even finance teams can't keep up with all the complexity that's happening within the tax calculation landscape. So it's that collaboration is critical. And you need to lean on partners when you can't figure out all these different complexities um, for expert advice. That's great. Well, Gunjan, this has been a fantastic discussion. Thank you for taking the time to walk through this landscape. I think it was a fun and insightful discussion. So I want to thank Gunjan Tripathi from Vertex for sharing her time today. And thank you to Vertex for sponsoring the webcast. Viewers, be sure to check out the additional information that you'll find in the resources section. There's some great resources there. On behalf of CIO and Vertex, thank you for watching. I'm Ann Taylor.